Hi, I'm Anthony Brister from Brister Law Firm, and if you're investing in the stock market or even just managing a retirement portfolio, there's one strategy that can help soften the blow on a down year, and it's tax loss harvesting. But before you sell off that losing stock, you need to understand how the IRS tracks it and the rules that can wipe out your deduction if you're not careful. In this video, I'll explain how tax loss harvesting works, what the wash sell rules mean, and how to avoid common mistakes that could cost you thousands at tax time. Let's talk about how to turn your losses into smart tax moves. Tax loss harvesting is a way to reduce your taxable income by selling investments that have dropped in value. Let's say you bought a stock at $10,000 and it's now worth $7,000. If you sell that $3,000 loss, it can be used to offset gains from other investments or even reduce up to $3,000 of your ordinary income each year. If you have more losses than gains, you can carry the excess forward into future years. This strategy is especially useful in years when your portfolio has both winners and losers. But here's the catch: you can't just sell at a loss and immediately buy back the same stock. That's where the wash sell rules come in. The IRS says if you sell a security at a loss and then buy a substantially identical one within 30 days before or after the sale, you can't deduct that loss on your taxes. This is called a wash sell, and it invalidates your tax deduction. The rule applies to individual stocks, ETFs, mutual funds, and even options. So if you sell Apple stock for a loss and then repurchase it or buy a call option within that 61-day window, you're triggering a wash sell. Even worse, if this happens in your retirement account, that loss is permanently disallowed. So how do you avoid this? You want to swap into similar but not identical investments. Instead of buying the exact same stock, buy a fund in the same sector or wait the full 31 days before repurchasing. A little planning goes a long way when it comes to keeping your losses deductible. At Brister Law Firm, we work with investors who want to use every legal advantage available without tripping up the IRS rules. Here's what we do. We help you time the sales and purchase to maximize the tax savings. We guide you on what substantially identical means for your portfolio. We coordinate with your financial advisor or CPA to align your investment plan with your tax strategy. We track carryover losses from prior years and make sure that they're used properly. Whether you're managing your own account or working with a wealth advisor, we help you make smart, tax-efficient decisions with confidence. We don't just prepare tax returns, we help shape your financial future, and we help you work towards your actual goals and not just an imaginary number. If you're thinking about selling investments or managing a volatile portfolio, don't leave money on the table. Read the full blog post linked below for deeper insights into tax loss harvesting and wash sell rules. And if you want help building a strategy that works for your specific situation, reach out to us at Brister Law Firm. We'll help you make the most of your investments, even in a down year. Thanks for watching. If you found this helpful, go ahead and give it a thumbs up, drop a comment below, and if you have any questions or thoughts, I always try to respond. And if you haven't already, hit that subscribe button, ring that bell so you don't miss out on the next video. And if you want to go deeper or grab the resources that I mentioned, check the description below. I've got all the links, tools, and next steps for you there. And if you're ready to talk about your specific situation, you can also schedule a free discovery call using the link in the description. Just pick a time that works for you best. And if you know someone who could benefit from this, feel free to share it with them. It really helps spread the word